Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Little M&A activity here in the tech sector. Intel finalizes a deal to sell 51% of its Altera stake to Silverlake. Now, Silverlake, folks, I got to know them back in the day. I think one of the smarter private equity folks that has a technology bent, some super smart folks. They've backed a lot of companies over the last 30 years in Silicon Valley. They know what they're doing. And when they move their money, you pay attention. Mandeep Singh, I also pay attention to him. He's a senior tech analyst at Bloomberg Intelligence, joins us here in our Bloomberg Interactive Broker Studio. What's Intel up to these days, Mandeep?
Well, they got a new CEO, and I think he's making the moves. Everyone was looking forward to what is he going to do differently than Pat Gelsinger. And it looks like he wants to turn around the foundry business. There was one school of thought that thought Intel should sell the foundry and focus on chip design like NVIDIA. But clearly he feels, foundry business can be turned around. And so the easy pickings here is raise cash, get rid of the non-core assets, which is Altera here. So they're selling 51% stake. Mobilize another business that comes to mind that they could sell. And look, with a company like Intel, everyone knows that, you can't really turn around this company to show high growth. It's more about how do you manage the company in a way where they're not burning a lot of cash, as well as they can have, low to mid-single digit growth. And I think that's going to be the playbook here.
So Mandeep, is Silverlake getting a good deal then with this acquisition?
I think so. I mean, Intel paid, $16 billion plus 10 years back. So they held the company for 10 years, and now they're selling at half the price. And look, this isn't a high growth asset, which is why it was non-core to Intel. But we know semis isn't that sweet part of the cycle where everyone seems to be bullish on AI and semis. And so maybe Silverlake can come up with a better way to, leverage Altera in that semi space, because that's what everyone seems to be excited by. How can I play in the demand for semis?
Why didn't they sell the whole thing?
Well, I mean, it's a private equity player, so they're not going to put a lot of money in one asset, and they just wanted 51% so that they can run the company. At the same time, Intel can benefit if they are able to successfully turn it around. And I think Altera still needs Intel technology to be successful. So it's not as if there's a complete decoupling. It just allows Intel to focus more on the core business, the foundry, and their CPU business, as opposed to focusing on Altera and Mobileye, I think, down the line.
Should we expect with this new Intel CEO to see more news like this, Intel selling other parts of its business?
I think so. Mobileye is definitely another one, which is non-core to Intel, even if they want to double down on AI and chip design within AI. I mean, Mobileye is more autonomous driving. And yeah, that also came from another acquisition that Intel did back in the day. So I hope they don't end up taking a loss on that one. But I do think the playbook here seems to be that they want to focus on foundry and core CPU chip design.
Foundry, that's making chips, right?
Yes, the manufacturing side.
Now, who else does that?
Well, we just heard the news around NVIDIA, using TSMC to make their AI supercomputers here in the U.S. So that was quite a bit of news, because I would have thought TSMC would partner with Intel. And there was some rumblings about, TSMC doing something with Intel, at least here in the U.S. But it looks like NVIDIA is thinking about making their next AI supercomputer with TSMC. No talk about Intel. And that will be here in the U.S.
I thought we invested. I thought there's some deal out there where Intel's going to do a bunch of that stuff.
Yeah, so that's where there was talk about Intel and TSMC partnering. Okay. So that was the foundry side of Intel, but I don't think that's happening now.
So the Biden plan with Intel, which was to do a big deal, big investment, is that still on or no?
So the CHIPS Act money was given to Intel. It was also given to TSMC for the Phoenix fab, where they will be making this AI supercomputer with, NVIDIA. But look, I think in the case of Intel, the challenge has always been, why have they not participated in this AI wave? And the CHIPS Act money didn't help over there.
All right. Mandeep Singh, thank you so much. We appreciate it. Mandeep Singh, he's a senior tech analyst. He kind of runs our global technology research franchise over at Bloomberg Intelligence. And he and Anurag Rana are the thought leaders there, and they kind of drive the process forward here. Intel selling 51% of one of their businesses to Silverlake, but a steep valuation discount. That had to hurt.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
Emily Grafffeo sitting in for Alex Steele here today. I'm Paul Sweeney. We're live in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube as well, so you can check us out on YouTube. Goldman Sachs put out their results this morning, better than expected results. The stock's up about 2.5%. It was really the equity trading desk powering the way here, similar to what we saw from JP Morgan, Morgan Stanley last week. So let's get the breakdown here with Alison Williams, senior analyst covering all the financial institutions for Bloomberg Intelligence. He joins us live here in our Bloomberg Interactive Broker Studio. Goldman Sachs, the stock traders had a nice quarter.
They did have a nice quarter, and they weren't up 45 to 50% like JP Morgan and Morgan Stanley, but still enough to hold that number one lead across. And what we're hearing is derivatives, which is not surprising, right, given all the volatility. And the other interesting note is, Goldman this quarter a little bit weaker than the peers, but over the long term, I mean, the market share gains they've had in FICC and equities trading, really strong, leading, across all of the banks. Over the 10 years, those three names, JP Morgan, Morgan Stanley, Goldman, all gaining. But really, Goldman has done a good job. They've been focusing on clients. They've also been focusing on financing revenue. FICC trading also above a year ago, just not as strong and a little bit shy. And then the other part of the story, as you know, is those weaker fees. So Goldman is number one in equity trading revenue. They're number one in M&A. Equity trading really powering these banks higher. M&A really feeling the fallout from uncertainty.
That's right. So the company's investment banking revenue was 8% lower than last year. Is that just due to macro uncertainty, companies not wanting to get deals done because they're not sure what's going to happen in the future?
It's exactly that. So debt fees really have been the area of strength across these banks. It continued to be the area of strength this quarter. Equity fees, which started out the year strong, as you can imagine, there was some stalling as markets sold off, like especially in the U.S. Late in the first quarter. But now really a lot of those deals coming to a standstill on the equity side of things. And then M&A, which really can be driven by CEO sentiment. Keep in mind, if you're going to sell your business, you want to be sure that you're getting the best value for your shareholders. Similarly, if you're buying a business, you want to be estimating what your return on investment is going to be. And you really can't. There's so much uncertainty. There's so much, I think, so much of a wait and see approach that business has really come to a standstill.
I see that David Solomon, the CEO, called out growing backlog. Backlog ain't cash. Backlog's not fees. What's he saying about the environment to get stuff done, whether it's an M&A trade, an IPO, that kind of stuff?
And that's a great point, because we always do look at the pipelines. And as you said, Solomon did point out, look, we've seen it grow another quarter in a row, but you want that pipeline growing because there's more new business not coming in, not because things are not getting done, right? So the pipeline can increase for two reasons. And what you really want is execution and confidence in the execution. So the positive sign, which I think is true for so many things, right, is that where we have a huge level of uncertainty. If that resolves, then you could be back in business. And unlike some of the other periods that we've seen with incredible uncertainty, right? So the pandemic, I mean, there was really no control over what happened there. I mean, obviously the scientists were working very quickly to come up with a vaccine. The global financial crisis, we know that there were huge underlying issues with the financial system. In this case, it's really about the politics. So certainly that is something that is incredibly difficult to handicap. I certainly am glad that I'm not the analyst there trying to figure out or estimate what's going on, or a CEO thinking about whether or not now is the time to sell my business. But I think that gives a little context in terms of, if we can get certainty, can we really just get that pipeline executed?
What's the high level takeaway from bank earnings now that we've already seen Goldman, Morgan Stanley, Wells Fargo, and JP Morgan too was on Friday, right?
Yep.
So we've seen all the big banks basically report, and they beat. What are investors supposed to take away from all of this about what it's telling us about the health of the banking sector at large?
I think, so earnings, as we know, are backward looking, and things looked very healthy in the first quarter. I think that, as I said, there's puts and takes, but for the most part, what we are hearing from the management is similar to what you'd expect with uncertainty. We do get Bank of America and Citigroup tomorrow. That will give us, I think, even a richer look in terms of the U.S. consumer, which, Bank of America is a good bellwether for. Citigroup has this big card business. But the key trends we're seeing are, one, trading strong, fees weaker. That's really due to the volatility. Two, buybacks, strength in buybacks, coming in better than expected. Big program at Goldman. So really, this benefit from lesser regulation does have an impact that we're seeing. And then third, uncertainty manifesting in credit provisions. We saw a big provision at JP Morgan, or I should say a sizable provision there, less so at Wells Fargo, but both pretty conservative. So in terms of what they're estimating going forward, and again, not based on what we've seen, but uncertainty, we expect the same at Bank of America and Citi tomorrow.
What's the headcount story on Wall Street these days? I mean, if this kind of outlook and this uncertainty, are they going to start cutting back headcount, do you think?
I think that's exactly goes to your point earlier, Paul, about pipelines, right? So we have the pipelines. If we get uncertainty, we can get that relieved. The CEOs are talking positive, but actions do speak louder than words. We did see cuts at Morgan Stanley. Certainly, they cited their typical review being pulled forward. They cited technology, but certainly the timing, I think, is instructive. And Goldman Sachs also talking about cuts that they'll be making in 2Q, flagging some severance charges there. So I think that signals that when they're thinking about the revenue sort of in the months ahead, that they do think that this uncertainty is going to damp the potential for the coming quarters.
What about CEO pay? Is it going to dampen that?
No problem there.
Or no problem there.
CEO, yeah. So we just got through that season, and that's going to be how they navigate this year ahead.
Yeah, I mean, they're all in that $34-35 million range all in, so good for them. They get paid. We appreciate that. All right, Alison Williams, thank you so much. We appreciate that. Alison Williams, Senior Analyst, Global Banks, Asset Managers, all that kind of stuff for Bloomberg Intelligence. It's a busy day, and we appreciate her coming into New York City.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
Mikey Shaw joins us here. He's the Senior Pharma and Biotech Analyst for Bloomberg Intelligence. He's in London, and he covers all these big pharma companies. And big one today, Mikey, Pfizer abandoning its obesity pill. That sounds like a big deal, because I keep reading the research you and your colleagues over there are putting out about this obesity market. This is a big market, and for Pfizer to have this big miss here, how big of an issue is it for Pfizer?
Yeah, I mean, I think it's a sentiment issue. I mean, clearly, you've got a massive obesity market out there, $100 billion plus in terms of size. And it's a market where, Pfizer's already kind of trailing large pharma peers like Lilly, Roche, Novo. In terms of, the obesity pill itself, so this was danuglipron. So what they actually did was, it used to be a twice daily pill. They kind of canned that and repurposed it into a once daily following the failure of another one of their obesity pills, lotiglipron. So I'd say, confidence into this readout, was pretty low. We had already kind of removed it from our models, back in 23. But what it does, create is, two concerns. One is, the trailing timeline in the BCC space. And two, it kind of adds to the mid to long-term growth worries of the company. So they've got, about $15 billion in lost revenue to LOEs that they'll need to kind of offset over 25 to 29. And at the moment, it's quite hard to see, where that offset and where that additional growth is going to come from long-term. Obesity would be kind of one pillar. But, following the danuglipron readout today, or the news today, that's obviously been terminated. So, we think that they're going to have to go to, look to, external assets in the obesity space if they're going to remain a relevant player in that market.
Mm-hmm. Is anyone else doing obesity pills in this market right now?
Yeah, so there's a few biotechs out there that are doing pills. In terms of the large pharma competitors, Lilly's got one. We'll see the data for that this year. Phase 3 that could potentially launch in 26. Novo's got one. They're expected to file, and then Roche also has one kind of in early to mid stage development too. On the biotech front, we're seeing moves for, Viking, Structure, Terns, all positive share price moves today, and they all hold oral GLP-1s in their pipeline too.
Hey, Mikey, can you put into just perspective the size of this obesity market relative to other big verticals that drive these pharma companies?
I think the excitement around obesity is, one, it's prevalence is rising. You got 40% of US adults at the moment that are obese, and it's a relatively underpenetrated market. So penetration rates are low single digits. In the US at the moment, probably even lower elsewhere, globally. We think that this market could grow, well in excess of $100 billion. So, it's a massive opportunity. I think in terms of, drug classes, I think immuno-oncology, PD-1 drugs, were the kind of biggest class to date in terms of sales. So that's like your Merck Keytruda, Bristol Opdivo. But, GLP-1s could potentially surpass that.
So, Michael, where does Pfizer go from here after this setback? Do they? Do they double down on obesity pills? Do they try something new? What's the plan here for Pfizer?
So, they've got another oral GLP-1 in their pipeline. So it's in phase 1. It's being developed for diabetes. Not sure, whether or not they can also look at that in obesity too. But clearly the timeline here is the issue. You've got oral GLP-1s coming to market in 26 onwards. You'll probably have a wave of new treatments coming in, towards the end of the decade. So we really think that Pfizer's going to have to go out, either in-license a GLP-1 or do some sort of M&A. They're well positioned to do that. They've got 10 to 15 billion of M&A firepower, for acquisitions. So that's really, how we think that they're going to do, play catch up in this space. In terms of, I mentioned some biotechs out there that have, quite appealing assets. You've also got China too. So, we've seen some, very competitive data in Chinese patients for some of those domestic players. And, we've seen the likes of Novo, Astra, Merck all delve into China's R&D locker to essentially bolster their obesity pipelines.
All right. Hey, Mike, we much prefer to talk to you than Sam Fazeli. This is a nice refreshment. So we hired Mikey Shaw like a million years ago. He was a kid. Now he's a grizzled veteran. I see a little gray hair there, and he's one of the leading pharmaceutical analysts all across Europe, and we appreciate getting a few minutes of his time. Mikey Shaw, senior pharma and biotech analyst for Bloomberg Intelligence, a part of that, just that great global healthcare team that we have at Bloomberg Intelligence, led by Sam Fazeli.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.